Hey folks, welcome back after a 3-day long weekend. My name is Dan Frio. I do the rate update every day. Today we're going to talk about the economic calendar. Today there's nothing on the economic calendar, so we're going to swing our data over to the Federal Reserve. Why do we watch the Fed? What are they doing and how are they going to act to cure the inflation front and the predictions there? So if you're new to the channel, please don't forget to subscribe down below, hit the bell every time I post a video, and give us a thumbs up if you like this video. So let's get on to where rates are today in the economic calendar. Well, I hope you had a fantastic Easter and welcome back on an early Monday morning. So what we're going to talk about today is there's really no economic news coming out. So what I want to discuss today is the Federal Reserve. Okay, everything cycles or pivots around the Federal Reserve today. You see that inflation is running out of control and they're blaming it on the Fed. The government has a role in that as well, but nobody wants to pick up that piece of the puzzle. Okay, but the biggest piece of the component right now, and especially real estate, is what's going on with mortgage rates. So let's explain behind the curtains all the stuff that I monitor on a daily basis, and especially the why. So let's get to it. Today's the perfect day to do this because on our economic calendar, there is nothing, okay? So the news out today that I just posted on this morning's newsletter is basically placeholder trading session, but not without some significance. So what we're looking at today is basically nothing. Everybody's coming back after a 3.5-day holiday. The London market is closed as well. You can see right through here, and there's no significant data coming out today. So that being said, great day to talk about the Federal Reserve. What are they? Why are they in place? Okay, so you hear everything right now about the Federal Reserve completely botched this stuff, but why is there even a Federal Reserve? Well, let's break this down for a second. Since 1977, the Federal Reserve has operated under a mandate from Congress. Basically, their mandate is maximum employment, stable prices, and moderate long-term interest rates. Okay, they're lumping the price stability and the moderate interest rates into one that they're calling the dual mandate right through here. So that's what the Federal Reserve is, why they were created, I guess is the best way to put this. Okay, so why do we watch what we watch on a daily basis? You might be like, Dan, why do you go over that? And why do you go over the jobs numbers? And why do you go over all this other stuff? Well, again, look at it. Maximum employment and price stability, AKA inflation. So let's go over the economic calendar that we have for the week. All right. So tomorrow we have building permits comes in, and that's an exciting number because we want to see at the initial get-go how many houses are starting to be built. But then we start getting through this stuff here. And now I'll point out what of these areas are a factor or a piece of their dual mandate. Well, existing home sales, no, not there, but we're going to focus in on that just to see how sales are going. But the next thing is crude oil. So the first thing you might say is, well, how does crude oil play into this? Well, great question. Oil prices, just think of what oil is in. Well, one of the biggest things it's in is gas. Okay, so when you have a huge spike in gas prices, and it's how everything gets around, even the commodities, you go to the food store in your car that runs on gas, most likely, and you go to the food store and you buy stuff. How did that stuff get there? Well, gas got it from where it was produced to the grocery store. Gas was also implemented in the growth process. You get it. Okay, I don't have to dwell on that. So you can see why that is a big component of the inflation piece of the puzzle. Then you go down through here, we have jobless claims. That's the jobs part, okay? I get rid of that. The employment, the manufacturing numbers, again, part of jobs. And then the Federal Reserve Chairman, his name is Powell, Federal Chairman Powell. He's going to speak Thursday for a long session. Okay, so that is the economic calendar today, and all of that fills in place of the mandate from the Federal Reserve. So now that I have you completely bored to death, let's get to it. So here's where we're talking about, why we're talking about it. This is what's the Federal Reserve. They control what's called the federal funds rate. It's interbank lending. It's not mortgage rates or car loans and anything else. It's a federal funds rate. Basically, when a bank needs money, they go to another bank to get it, and that's the federal funds rate. Just think of it that way. Interbank lending. All right. But what I want to break down here is let's look between the lines a little bit. The Federal Reserve right now, the federal funds rate is at 0.25. Okay, this is where I want to focus in on today. Well, all the consensus basically says by December, we're looking at these two lines right here, the federal funds rate is to be at 2%. Well, that means we have to go up 175 basis points, or 1.75 in that rate. Well, how many meetings does the Fed have remaining left in the year? Well, it's right here. They got 1, 2, 3, 4, 5, 6. 6 meetings left, and they have to go from 0.25 to 2. So that means one, maybe 2 sessions, they're going to have to raise the federal funds rate at least 0.5%. Okay, they haven't done that yet. They've been speaking about it, but up to this point, they've only done 0.25 in increments. So when this happens, how's the markets going to react? That's the uncertainty that we have. Are they going to overreact like they normally do, thus jacking up mortgage rates again and plummeting the stock market? I don't know, but I don't think so. I think a lot of this has been baked in, and the Federal Reserve, as well as everybody else, knows that housing plays a huge part of our economy, and they're not going to let housing go adrift at this point like they did in 2008 and other times. And there's a whole bunch of other data behind this, but I just want to share with you guys why the Federal Reserve is in place, why we monitor its activities, and the components of what it monitors is where we really like to go dig into the microeconomics of all this stuff. So that being said, if I have you completely confused, I got your back. Okay, this is the stuff I'm doing in the background to assure you guys that we keep you up to date on what's going on with mortgage rates. So that being said, why are you here? Mortgage rates. So let's get to it. It's nice to have the markets open to give me something to talk about. So this is why you're here, basically. So you're going to say, no, Dan, I want to see the interest rates. Well, this is the component that actually figures out or causes all the adjustments to the mortgage rates. It is the mortgage-backed securities market, also known as the MBS market. Okay, that's right here. What this number represents right here is what's going on to the price of this bond. Okay, so why do we watch the MBS? Because it is the biggest component of your mortgage rate. Okay, the yield on this thing. So when this price goes up, which it does right here, it says a plus. When this goes up, yields go down. Well, since this is a mortgage bond, that means the yield on this mortgage is going down. Okay, that's great. We love when this goes down or it's green. You don't see a lot of green down through here. Okay, well, let's go down to the trend for the day. It's right about in the middle. So we're going to say, there's really no news coming out today that should really affect anything other than the Russia situation and inflation. Okay, so that being said, let's get over to mortgage rates. You're going to see a big jump in mortgage rates. Okay, a lot of people were saying the other day, oh, Dan, it's coming back again. No, guys, please trust me on this one. Let's go across where mortgage rates are for today. These are published by Mortgage News Daily on a daily basis. We use this as our benchmark. Okay, basically, I need to use a benchmark to show you if things are going up or down or which way they're going. So we're going through across here. The 30-year fixed rate, and this is how you read this cell, is it coming in at 5.15. It is up 0.16. We call it 16 basis points. And there's a cost of 0.4 in points to get that rate. Okay, so if you extrapolate out the points, you're easily at 5.25. So at 5.25 or higher. I get a kick out a lot of mainstream media coming in right now saying, hey guys, we're finally over 5%. Don't know where you've been for a while, but we've been there for a little bit of time now. But that being said, let's move over to the 15 years. So let's go across here. I'm going to say it in my lingo just so we can get through this. The 15 years coming in at 4.45, up 11 basis points. And that's where we are today right there. Guys, this is a major swing. You can see 0.16, 0.111, 0.14. We usually get an adjustment of like 0.0 something, 0.01, 0.02, 0.03. These are big moves. And a lot of people aren't understanding it usually isn't this volatile. Okay, so then we go over to the government loans. This is FHA, VA, and USDA. They all kind of come with about the same rates. Okay, they're coming in at 4.75, up 14 basis points with no cost. 30-year jumbo is coming in at 4.35, up 6 basis points. And look at the 5-year ARM. It's over 1 full percent from the 30-year fixed. So this might be an option for you. If you're interested in these, please ask and we can educate you guys on the adjustable rate mortgages, how they're not the mortgages of old. They're much, much, much better. So that's what's going on with mortgage rates right there. You can see down through the trends. It is minimal. So basically, it's right in the middle. There's really no news coming out today that should affect anything. So that's the report for today. So if you like my video, sorry it's a little lengthy. It's a day off for rates, kind of, sort of. So I figured I'd bring you up to date on what's going on with the Fed and the Wise. So thank you so much for watching. My name is Dan Frio. I do the rate update every day. If you're in more need of a mortgage on a residential property of any kind, if you need a long-term extension, which if you're building, if you need to get pre-approved, we can do that in an hour. If you get looking for reverse mortgage, debt consolidation, home equity loans, anything, please give us a shot. At least give us a call. Let us give you a quote. How you do that is give us a call up here, 844-775-5626, or you can check us out on the web, or you can even apply online. But the cool thing is we now have a chat bot, which I'm not up next, but I'm usually right on there. So if you have any questions and you go to the website and you have those, just pop those in the chat box. Somebody will be answering those for you immediately. So thank you so much for watching. God bless. I'll see you later today. Bye-bye.